Hello everyone and welcome back to the Common Sense Crypto channel. As with you always, this is Rich doing another video today on XRP. So I hope you're all having a wonderful day today wherever you are in this great world. We're gonna talk about XRP. And I gotta start with this. Ripple effect, a legal flap that could redefine crypto's future. So what they're saying here is this: the cryptocurrency regulatory landscape remains a battleground, and the ongoing legal fights, particularly Ripple's clash with the SEC, highlight just how uncertain the future is for digital assets. These courtroom decisions will not only determine Ripple's fate, but will send waves, pun intended, across the broader cryptocurrency market. The question still looms: will innovation prevail, or will regulatory scrutiny tighten its grip on an industry still finding its footing? If Ripple wins, it could embolden other crypto projects, offering the industry some much needed regulatory clarity. And that's why you see all these other crypto companies, Coinbase, Binance, citing the Rippleverse SEC case, because it gives a better path forward with the SEC when they're taking these other cryptocurrency companies to court. It gives those companies an argument against the SEC. But we all know regulations are coming for this space. Crypto isn't going away. You know, every once in a while you see these people that write some of these articles, not this one, but other articles, and they're like, will crypto make it? Is this the last days for crypto? It's like, what are you? We're not in 2014 anymore. We're not in 2017 anymore. We're in 2024. Crypto is only going to gain adoption from here. XRP is not a security, Ripple's Stuart Alderoty reveals in a new claim. So Stuart says this: the secondary market for this ticket doesn't make it a security, just like trading crypto doesn't. Not every market is a securities market. You want to know why Gary wants to make every single market a securities market? Because he knows tokenization is coming. And there's no clear path forward for tokenization either. Gary already said that in a lot of cases, tokenization or tokenized assets can be securities. We need Gary gone at the SEC. It's going to be hard for tokenization to even take off in the United States with Gary at the SEC. But we will see things change very fast once Gary's gone. Chris Larson's 2.75 billion XRP could soon support Ripple ODL as Supply Titans. So there was 50 million XRP tokens that were moved from Chris Larson's wallet. People once again thought he was hacked, but XRP wallets had continued to track the remaining assets, confirming that more XRP tokens had moved to exchanges since then. 20 million went to exchanges. Now, on-chain data shows that only 5 million tokens remain, following the recent movement of 10 million XRP to Binance. So Chris Larson's XRP is going out to the exchanges. So that tells you that there's a demand for XRP. And wait until on-demand liquidity starts to gain momentum. Watch how fast that escrow disappears. World Bank argues against cryptos as a reserve portfolio asset. So here's the World Bank's take. First, they talk about volatility. They think decreased volatility is needed. Crypto assets are not a good way for central banks to self-insure against shocks because their prices are highly volatile. With an annualized volatility of 70%, this is far greater than the volatility of equities and gold. Stronger custody and safekeeping solutions. What is Ripple creating right now? They're creating a better custody solution. And I think whatever you see Ripple doing, it's what the banks are asking for. It's what the BIS, the IMF, the World Bank, whatever they're asking for, that's the direction that Ripple is going in. More than enough decentralization. Potential dangers exist in crypto asset initiatives that are not adequately decentralized, so they are subject to substantial control by a governing body or central party. Large investors are hesitant to take on and manage substantial exposures to crypto assets. This is due to their limited liquidity and market capitalization compared to more traditional currencies and asset classes. However, derivatives markets have developed to control risk. The liquidity of the biggest crypto assets, such as Bitcoin and ETH, has greatly increased. Here's the problem that the central banks have with Bitcoin, is they look at it as a Chinese-controlled cryptocurrency. That has been mentioned multiple times in the past. And I think that's going to be a big problem for Bitcoin as we go into a more regulated market. Investment tools are readily available. Government bonds and other extremely safe investments are the norm for central banks. For the most part, crypto assets don't perform anything useful on their own, like generating interest or dividends. There are still many unknowns and dangers in this experimental environment. This is despite the potential for staking to create revenue and the potential for DeFi apps to aid in the generation of returns on crypto assets. But now we're starting to see staking also coming to XRP. And I think that's going to be great. That will lead to passive income over time. Now this one's big. Implementation of banking and commerce protocols. Crypto assets must become a tool for cross-border investment and trade flows. This is to ensure reserve managers against trade and financial shocks. In such flows, crypto asset adoption is quite low. But once adoption starts to pick up, that's going to change very quick. And I think what's going on with the World Bank is they only see two cryptocurrencies as having any value. Remember when they talked about XRP and XLM as stable coins? What they meant by that wasn't that they were going to be pegged to $1, but they were going to be asset backed, and they were going to be sitting at a higher value, a high stable value. Then they go on to talk about cross-border payments and transactions. And back then, XRP was only capable of 1,500 transactions per second. But now through Interledger Protocol, that's going to change, because now you can do 1 trillion transactions per second. It will be fast enough, and it's going to be able to serve every single person on the planet. And that's what it was built to do. This new paper is a true declaration of war. The ECB claims that early Bitcoin adopters steal economic value from latecomers. I strongly believe authorities will use this Luddite argument to enact harsh taxes or bans. So what the ECB is saying is that the whales are taking from the new investors, or they're using them as exit liquidity. And now they plan to tax this shit out of Bitcoin. Now, I don't like the idea of this at all. I feel that if people were smart enough to buy Bitcoin early on and they made a lot of money with Bitcoin, then why should they have to pay taxes on it? Why should they have to pay even more capital gains tax? I think that should never happen. And, you know, if they do this with Bitcoin, they'll do it with other cryptocurrencies as well. But they also go on to talk about how Bitcoin is trapped inside of a bubble, and it's eventually going to burst. The ECB doesn't see Bitcoin being relevant going forward. I don't either, not when a new financial system comes. But if people want to hold on to their Bitcoin and they want to sell it without paying a shit ton of taxes on it, then that should be able to happen. You should not penalize people because they were smart enough to buy Bitcoin earlier than someone else. Same thing could be said about XRP in the future. We were smart enough to buy it while it was still cheap. When it goes to $100 plus or $1,000 plus in the future, we should not have to pay higher capital gains because somebody else that's buying it at that time is paying more for it. I think this is wrong in so many ways, and I really don't like the idea of it. But the fact of the matter is this: XRP is superior to Bitcoin. The problem I have with Bitcoin, the biggest problem I have, is a lot of retail investors are coming in to crypto. And a lot of them are getting into Bitcoin because that's all the mainstream media news pushes. Same thing with BlackRock, Michael Saylor, and so on. And I think that BlackRock is eventually going to rug pull Bitcoin. I think BlackRock is set up by the elites. BlackRock works with the ECB. They work with the IMF. They work with the BIS. They work with the World Economic Forum. So when all these central banks say it's time to pull the plug on Bitcoin, I think BlackRock is going to take the lead on that. Now, people would say, why would BlackRock do that? They have so much money invested in the Bitcoin. No, BlackRock does not have money invested in Bitcoin. Customers of BlackRock have money invested into Bitcoin. You know, people still don't understand that. They think that Larry Fink is taking out of the BlackRock money. No frickin' way. Because the shareholders, the elites that sit on the board at BlackRock, would never ever let that happen. I think they're taking everybody else's money and they're creating value out of nothing as well with those ETFs. And I think it's a rigged system, and I think it's going to be manipulated going forward because of BlackRock getting involved. No central bank wants to stop inflation. You know why the central banks are always, look at the Fed. They're fighting inflation, right? The Fed says we cannot get inflation under control, but they don't want to get it under control because inflation is the perfect hidden tax. Think about it. Okay, as long as inflation keeps going higher, it's just like another tax on your paycheck every time you buy things. And that's why the Fed, they come out with these fake numbers every single month. And we know better because we're the consumer. We're buying these products. We're paying the high prices. But at some point, people will stop paying these prices. They'll figure out other ways to get by. Then all of a sudden, inflation will magically come back down. But I don't think it's going to come down until something breaks first. The collapse of economic order, inflation, immigration, and a nation drowning in debt. That's what's going on right now inside the United States. And it's getting worse because the debt isn't going away. Inflation isn't going away. Then every time you turn around, they're either sending money overseas or they're giving money to people that are crossing the border. And at the same time, it's dividing the country because you have people saying, well, we got to help all these people. And you have other people saying, no, we have our own people to take care of. And it causes division at the same time. But eventually, the US dollar is going to lose reserve currency status. At some point, the dollar is going to come crashing down. And it takes me back to a post I made a couple months ago. You most likely won't be valuing XRP in US dollars in the future. You will be valuing it in what one XRP can buy you. Just like a gold-backed dollar will buy you so much more than what one US dollar buys you today. And I think we are headed back to a gold-backed system. But that's how you're going to be valuing XRP. People will be saying, well, what is one XRP worth? well, you'll be able to say, well, one XRP buys me, I don't know, maybe it buys you a grocery cart full of groceries. Or maybe 10 XRP will buy you, I don't know, a Cybertruck, something like that. Maybe 100 XRP will buy you a mansion in the future. Nobody really knows. But I know this, XRP is going to be moving a lot of value on a daily basis, and it cannot be sitting at a cheap price when that happens. There's no way you can have a 50-cent XRP moving the world's money, moving tokenized assets on a daily basis, moving the value of 100 barrels of oil or 1,000,000 barrels of tokenized oil or a pound of tokenized gold from one country to another. It has to be at a high price. And, you know, it's eventually going to happen. But until it does happen, you got to stay patient, stay positive, and let's get rich together. With that said, I'm going to wrap up this video. I want to thank you all for watching. I appreciate all of you. I'll see you in the next one. Have a great night.